Hi all, we thought it would be it's an opportune time to reach out to all of you through what I think we would all agree is a pretty difficult and uncertain time. I've heard quite a few sort of mention out there to treat this like it's business as usual, and I want you to understand that I suppose from our perspective it's not business as usual. We are seeing firsthand the potential financial stress that is being placed upon many of our family, friends, and clients. And we also understand that some of you are in a circumstance where you're not sure what the potential impact is going to be, and when you're faced with that uncertainty, that can be just as bad as the actual knowing. So, the stress caused from that uncertainty, we just wanted to let you know that, I suppose, as your mortgage managers, we've always felt that we hold, we'd like to believe that we hold a privileged position. We're involved and engaged in some of the biggest financial decisions that you make, and as a result, we get to hear and understand and share in a lot of stuff that happens off the back of that's going on in your lives. And we wanted to let you know that in this, I suppose, time of uncertainty, the one thing that you can count upon is having the team here in at FinancePath here and available to hear your concerns. As business owners, we wanted to let you know that obviously other fellow business owners or even employees, there's plenty of job losses that are taking place at the moment. Both Chris and I have made a commitment to the guys that we've got within our office to ensure one of our big key focuses is to make sure that we don't have to put anybody off, and we share that with you for one reason alone, is so that you guys know that when you pick up the phone and you make a call through to us, that there are going to be people here that are ready, willing and available to be able to answer your concerns, your questions, and provide you with the necessary guidance and advice. The purpose of this video is fundamentally to firstly let you know that. We also want to cover off a couple of other topics that are really relevant at this point in time, namely hardship claims. We'll also talk a little bit about the outlook for interest rates, because we're still getting that inquiry and there's a little bit of sort of confusion in the marketplace at the moment about what's happening there. And then we'll also wrap it up with, we also do have those clients of ours out there that are asking the question, is now the right time to be buying? So we'll cover that off as best as we possibly can. With respect to hardship claims, I'll throw it over to you, mate. You want to give the guys a rundown on that?
As you could appreciate, guys, we, like most funders, have had an increased call volume regarding hardship claims, the process to apply for those, and actually what does it really mean? There's a whole range of questions that come off the back of that. So first and foremost, I wanted to let you guys know that we've created a financial hardship claim page on our website. That's aimed to cover a range of things, frequently asked questions that we get from our clients all the time, and also provide you guys some guidance and some direction on what some of those questions may be. So I'd point you, there'll be a link at the bottom of this video that can point you in the right direction to that. I'd encourage you to look at that. Firstly, one of the questions we're getting is, what is a financial hardship claim? And what are the banks offering in regards to that? And there's a little bit of misinformation in the market around residential lenders offering sort of blanket 6-month repayment holidays, and that is not true at present. The 6-month blanket repayment holidays is true for small business owners.
Yeah, so people with
business lending.
So small business owners that have business loans, guys, they can pick up the phone and request a 6-month holiday, and it's given bang without
and
question.
that's the government effectively acknowledging that small business plays a huge part in terms of employment and underpinning employment in the country. So they've given them that allowance. But in terms of residential mortgages, 6-month repayment holidays would need to be applied for under the financial hardship clause. Now, what is financial hardship? It's effectively the significant loss of income or a reduction in income. And if you are suffering that at the moment, as many of our clients, many people in the community are at the moment, you have a more than justified case to apply for financial hardship. So as you'd appreciate, many of the funders have extremely long wait times. As part of the link on our website, we've created or provided you guys with the key contact points to our funders and to a range of other funders via the bank. So please go to the website to look at those direct contact points. But there's some key criteria that you need to include in a financial hardship claim. We've also included a templated letter that gives you some guidance around the key points that you should cover to assist in making sure that you get the outcome that you're looking for. We'd strongly encourage you to put all your requests, if you do fall under the financial hardship criteria, in writing. One, it gives you a reference point to call back on, and two, we believe that in the current call volumes that you'll probably get a better and speedier response as well.
Yep.
Second to that, if you are not suffering significant loss in income or a loss of job at the moment, but are concerned around what your options are, please go to our frequently asked questions, because there's some strategies within there that you can do to start to prepare, should you be concerned around that, just to make sure that you've got surplus cash flow, and somewhat protecting yourself. So please go to frequently asked questions, because some really good information in there. Equally, our 1300 number is available for our guys to call, for you to call our relationship managers, and equally Mark and I are available at any point in time.
And just understand, when it comes to hardship claims, guys, that lenders are going to be inundated. They've already started to be inundated with these claims, and whilst there might not be necessarily a set criteria at this point other than a genuine loss of income, it stands to reason that they are going to have to, if they're weighing up someone that's still gainfully employed but have just lost a tenant compared to someone who has lost their income or lost their job, or their business is folded, then they're obviously going to be measured and judged accordingly. So as Chris alluded to, the templates that we've provided in the FAQs, we'd like to think will cover off the majority, if not all, of the scenarios. And if your scenario doesn't necessarily fall within that, then by all means, as Chris said, give us a buzz.
Yeah.
Okay, mate, interest rates, the outlook.
Yes, so the outlook, well, let me go back a step. The RBA at the start of this month announced a 25 basis point reduction on the cash rate, which was largely passed on by all funders in full.
Yep.
Their variable rate.
Yep.
Probably about 4 weeks ago now. There was an extraordinary convening of the RBA, and they also announced another rate reduction, the cash rate, over the last week.
Points.
Yeah, which at this point in time has not been passed on by the funders
And
in their variable
and
rate,
and
possibly won't be. What we have seen is some
Sorry,
reduction.
just on that, I think ANZ came out and they gave a partial sort of a partial pass on, but you would have found that their rates are probably sitting a little bit above the majority of the others.
Yeah, that's right. What you have seen though is some fixed rate special reductions that have come out. Not so much that their cost of funds are reduced. We believe that's probably more of a strategy to lock some clients in to some rates. So please, if you've got any questions around that, reach out to us and understand what might be suitable for you. One of the reasons why they haven't passed on the rates is because although the RBA, the cash rate is reduced, that's only one source, the cost of funds, the banks source their funds from. We've been talking about this for a number of years for those that have watched our directors' videos. Cost of funds come from a range of sources, international money markets, also cash rates, and the cost of funds internationally has increased over the last little bit. So their ability to pass it on is just not there.
And primarily they've gone up because at the end of the day, this pandemic has obviously caused uncertainty and concern. And when that happens in financial money markets, then the cost of borrowing and the amount of money that investors want, basically, if they're going to give you the money to banks to lend on, you can understand they're a bit nervous about capacity to repay. So the cost of getting access to that money has gone up.
And all funders, including our funders, passed on the rate cut 3 weeks ago.
Yep.
And our funders, like all other funders, retained the variable rate at the same at this point in time. So we haven't moved out a step or in step with any of the other funders.
So what you see in the current market, then there's a little bit of a discrepancy between variable and fixed, and there's some fixed when we straight up wouldn't have thought that fixed rates would get much lower. But these specials have been rolled out. I wouldn't expect them to be long-term ones, as you alluded to. They're probably as much about a strategy about locking away some clients for a period of time.
And I think what the key thing to note is if you're looking to fix, one, to beat the market or take advantage, there's a range of considerations you need to take into account. Strongly encourage you to speak to your credit advisor, Mark or myself, or someone in the business before you do that, to understand if that's the right thing to you, particularly given some of the uncertainty around what you may be facing personally at the moment.
Yeah, because not all fixed rate facilities are created equal.
No, they're not. No. Now, finally, mate, a question, funnily enough, in the current environment, and I don't say funny enough, we've got plenty of clients in the process of buying at the moment. We've got plenty of clients who have access to cash. We have plenty of clients who, crisis like this presents opportunity for some people, and they're seeing this at the moment, and we are getting the question, is now a good time to buy? What are your thoughts on that?
Yeah, so in one way, it's a bit perverse to turn around and be having this conversation with our clients, understanding that so many of our clients, as we just discussed, are facing some sort of hardship. But the reality is, for our clients that are in situations where they have financial security around their income, they're fortunate enough in that position, and they've got themselves into a financial position where they can accommodate or an opportunity to purchase is valid for them. Yeah, we need to cover it off. So it's hard to give a blanket answer to is it the right time, primarily for two reasons. Firstly, even every person's financial position is different, even if it is strong, and their risk appetite is different. So for one person to buy now and then see the property price drop away for 10%, that could be the end of the world for them, whereas somebody else has got a more long-term view and a different risk appetite, and maybe even just more sophisticated or experienced with investing, and that doesn't phase them.
The means to fund it during that period of time as well.
All that sort of stuff. So it's hard to give a generalisation in that sense. That's one reason. The other reason is there's so many different property markets within a property market. One of the frustrations or the misleading things, I suppose, that happens in a lot of reporting is that, okay, Sydney's market went up, Melbourne's market went up, Brisbane's went down, etc. It's such a broad brush comment, and there's different markets within markets, different locations perform differently, different property types in different locations perform differently. So it's very hard to give a broad brush and say, yep, now's a great time to buy. What I would do is just turn around and say, okay, well, let's just scale it back and focus on the fundamentals that drive property growth, which is supply and demand. We've seen over the last sort of 12 months that low interest rates have certainly driven demand for property, primarily off the back of obviously low rates making it affordable, banks loosening the criteria in terms of the ability to get finance. It might still take forever and a day to get them to approve it.
But you can get a little bit more.
You can get a little bit more, and so it's a little bit easier there. And so what's not going to change there is affordability is not going to change. We don't anticipate, as we just mentioned before, interest rates to be going anywhere. So we don't think that affordability is going to be a challenge. The caveat is, provided you have a job. So if you think about the demand and the supply side of things, property prices are going to go up. If at the end of the day there's greater demand than there is supply, well, I think it is a pretty strong case to argue that we don't think that the demand is going to be there over the next 6 to 12 months, whilst this uncertainty
exists.
exists.
People take a bit of a break and take stock. Uncertainty around employment is going to be one of the drivers.
So I wouldn't expect demand to be there. Then you flip over to the other side and you talk about supply, and you go, okay, well, will there be a greater supply? And that's a bit of an unknown. If you think about supply, you go, right, well, if people don't need to sell, then now is probably not the time that they're going to put their property on the market. So that might marry off with demand. Whilst there might not be great demand, there might not be great supply, and there may not be as much of a price reduction as some of the commentators are suggesting. Where it may start to see further pressure on downward prices if supply does increase, and the reason that it's increasing is because more people are putting their properties on the market. It might not be their own home, they might be able to manage that, but that first or that second investment property is making things tight, and at the end of the day, they're the properties that find their way onto the market. So if that does eventuate, and if we see a bit of this protracts and prolongs, and it's not just how long does the virus hang around, it's how long does the economy take to recover off the back of the impact of this, then I think it's pretty safe to say that at the end of the day we would expect there's going to be some downward pressure on most property markets, some more so than others. And as we said at the start, if you fundamentally understand your worst case scenario and you're able to cover that off, if you've got certainty around your income, etc., then there's a good case to argue that some of the price increases we've seen are going to come back off, and you probably won't be competing with as many people to go and buy that place, especially in light of the rule around auctions no longer being allowed, public auctions, and open for inspections. Please understand that you can still have open for inspections, but they're by appointment, so you'll be going through it on your own more than likely, and it will move more so to a private sale type situation. So it's not like that there won't be properties to buy, but no doubt it's going to be a little bit harder. So I suppose in summary, what we'd like to say is that, like, regardless of your position, whether you're in a situation where you're thinking you may need to make a hardship claim, you have to make one now, or you're looking at your opportunities, first and foremost, we're here to help you and guide you and provide you with the necessary advice. Outside of that, I suppose it's without sounding wanky about it, it's like stay safe, look after the things that are most important. Yourselves, your families, and let's try and abide by all of the measures that are being put in place, even if they feel like they might be drastic, because the sooner we get rid of this thing, the better I think we can get back to some normality.
100%. The easiest advice we can give you, if in doubt around your own personal financial circumstance, don't be a stranger. Go to the frequently asked question page on our website or get in touch with us. We're here to help.
Yeah, cool. Take care, guys.